so with no end in sight for the uncertainty in the Eurozone, where should investors be putting their money? To give his views, I'm joined now by Lothar Mentel. He helps oversee £2.5 billion as CIO at Octopus Investments. Lothar, good to see you. Thanks for coming in. Where do you see markets heading over the next few months?
Well, if we don't get any more of those upsets that we've seen in the first quarter, then all the fundamentals are looking really quite promising for equities, because all the good things that we were looking at around Christmas, they've all materialized. We've had good macroeconomic updates, the companies are earning good monies, and relative stock market valuations are at pretty much lows or very low levels in the long-term perspective. So equities are looking attractive, although we're getting to a phase in the cycle where the cycle is maturing. We're coming out of this initial growth phase, the recovery phase, the more mature part of it, and as leading indicators have started to turn over or slow, they're still at pretty big highs. That points to perhaps a rotation from growth stocks into value stocks, for example.
I mean, if you just look at what we've seen so far in the first quarter, I mean, who could have predicted it? A nuclear crisis in Japan. We still don't know what the ultimate impact of that will be. Turmoil continuing in the Middle East, yet more uncertainty there. Another country bailed out here in Europe, the third Eurozone country, Portugal, has had to seek financial aid. So how is all this? Despite all of these things, you're still positive on equities. You don't think that these are risks to the scenario that you outlined?
The only real headwind and big risk that we have to the scenario at the moment of a continued macroeconomic growth and expansion is the oil price. The oil price is a serious headwind. That's certainly too high for our liking, and it could put a dampener on the global economy overall, but it isn't yet. The jury is still out whether we will have the oil price at these levels for a very long time. At the moment, it feels a bit more as if everybody, in the light of the Middle Eastern unrest, is they're all increasing their reserves, and once that's done and the higher oil price is also starting to bring demand down a bit, we might well see the oil price normalizing again. But it's all a function of whether this macroeconomic or the geopolitical situation, particularly in the Middle East, is quieting down, or whether it is deteriorating any further.
Aside from what's happening in the Middle East right now, it seems to be a trend that we're seeing. I don't know if everybody would go so far as to call it that, but we are certainly seeing commodity prices, not just oil, but agricultural commodities, metals, everything seems to be on the rise. How concerned would you be about that weighing on corporate earnings in the coming months?
That is one of the concerns, and that will be what we will be watching very much with the earnings season, which is just being, will just start on Monday. It will be not, the interest will almost be more in what do those companies say about their cost situation than about their earnings in the last quarter, because we know that the earnings in the last quarter were quite good. So that's not going to be the surprise. The surprise will be more, what are they expecting for the future? That's what we will all be watching.
Eurozone bailout, Portugal, does it end there?
Well, I sure hope so. Spain would be a much bigger problem, but yes, all eyes will now be on Spain. But is it great for Portugal? Well, if I look at Greece and Ireland, the bailout hasn't really sorted their problem. So the EU needs to do more if they actually want these bailouts to actually really get those countries back on track, and showing a bit more true solidarity in that union, which, when you compare Europe to the US, now makes a real competitive advantage for the US, which is truly a United States where, the troubles of California are not bringing down California, whereas in Europe, there isn't really enough of a true community, and therefore everybody, when the going gets really tough, is still on their own, and the EU is only able and willing to deal with the aftermath of a crisis, but not to prevent it, which is...
So there does need to be this more of a fiscal union as well as a monetary union. Do you think it is fundamentally a political problem as opposed to an economic one? Does the politics need to be addressed?
I think there's a big political problem. Fiscal union, well, I'd be a bit careful with that. California hasn't behaved like it's part of a fiscal union either, and still the United States can prosper. It's a bit more...
California's in a lot of debt, though.
Yeah, it is. It's bust. But it still hasn't meant that California isn't in a very good economic state anymore. And that's what the Europeans have to learn from the US. How do you deal with the these discrepancies in your country and still make it work.
And very briefly, you said that you are positive, more positive on the US than Europe. You say they have the competitive advantage, but a great deal of uncertainty surrounding monetary and fiscal policy in the States right now, no?
Yeah, well, again, they've got a real advantage, whereas we have to worry about the bond vigilantes because we're all on our own. The US are big enough to just say, well, what are you going to do?
But is it only a matter of time before the bond vigilantes turn on the US?
No, they're just too big. For the time being, while China is still not balancing their power, the US can get away with a lot more than the rest of the world, and they're using it to their advantage.
Lothar Mentel, great to talk to you of Octopus Investments. Thanks so much for coming in.
Thank you very much.